Hello traders, welcome to this live webinar about Zeus EA. I just want to check if you can hear me properly before I continue. Today we're going to talk about the profit share model that is now available since I think yesterday rather than the renting option. In fact, both are available, so you can decide or even choose both. But this is a new option and it's interesting because there are no upfront costs or fees before starting. So rather than investing money into renting the EA, you can invest that right away in trading the EA. So that's a great advantage. We're going to dive into a lot of things today, but certainly discuss the profit share model, discuss a little bit about the strategy, the statistics, and the back testing as well. We've already discussed that in previous webinars and videos. But we will do that again here. But yeah, primary thing will be that to explain the profit share concept and how you can join that. All right. So I already see a question from Marco. That's great. If you have any other questions, feel free to reach out in the chat during the live webinar. If you're looking at the recording or on YouTube, feel free to reach out to our email address, info@elitecurrency.com, and get more info by asking questions there, of course. All right, so just want to check once again. I didn't get any confirmation yet that you can hear me. I hope you can hear me, first of all. Okay, great. So, yeah, this is, sorry about that. This is the scheme for, or the overview for the profit share model. So what it means is that a part of the profit is shared if on a monthly basis, if there is a profit, if there is a equity peak. I'll explain that a little bit later, but the advantage of that is that it's a win-win. So if the trader, you invest money, but there is no profit, there is no cost basically. If there is profit, then a percentage goes to us. What percentage? Anywhere between 10 and 30%. The rest is yours. That means that you get 70 to 90% of that profit. Then it's up to you whether you withdraw the profit or you keep it on the account and trade with your balance plus the profits and increase, your capital. Of course, that's your decision. So in September, we have a great, as an introduction to Zeus EA and the profit share model, we have a great incentive or a great offer. There's a discount basically. You will only pay 20%, which is great. It's low, and you can start with as low of a capital as €1,500. With the rental, we advise 2,500, but because this PAM, which is traded through Key2 Markets, our partner broker, has more traders and bigger capital. That's why we are able to reduce that capital, the minimum capital. Whereas if you're trading on your own, you don't have that benefit. Okay, but that's only valid for September. If you join in September, 20% and minimum is 1,500. So there's great benefits to join in September. If you do a little bit more, you can decrease the percentage down to 15. So that's if you invest and trade with 10 to 50,000 euros. Okay, you have to open a Euro account, by the way, when signing up through Key2 Markets. And if you even trade with 50 to 100,000, it's 10%. If it's more than 100,000, feel free to reach out to us so we can make a custom offer. That's all in September. Now, if you start in October, it's still pretty good conditions, I think. Right, very decent percentages. It's 30% between 7.5 and 15,000. Between 15 and 20,000, it's 25%, and more than 20,000, that's 20%. The minimum, however, will be higher. It will be at least 7,500 euros. The percentage you get in September is valid for forever, as long as you keep the original deposit on the account. So the net deposit needs to be more than, you have to basically keep a sort of net deposit there, of course, to keep 20%. If you want to keep 50%, you have to have a net deposit of 10,000. You can withdraw the profit. So let's say your account goes from 10,000 to 20,000. You can withdraw 10,000 and you'll still keep the same percentage. But if you withdraw 18,000, then you only have 2,000 net deposit. Then you'll go from 15 to 20%. Okay, so that's the only thing. But you will keep these percentages, though. You lock them in as long as you're a member, basically, and stay a member. Okay, so that's good. A lot of advantages of starting in September, but not bad to start in October or later. These percentages are also very decent as well. But certainly a nice benefit to start in September. Now, net deposit basically means your deposit, you deposit 10,000, for instance, and your account is on 30,000 or 18,000. Okay. So, and then you withdraw 5,000. So that means you have basically 13,000 net on your account. So that's fine. Only if you were to withdraw more than your profit, then your net deposit goes down and you might go to a different category of percentage, if you see what I mean. Okay. Anyhow, it's a detail. Don't want to get stuck here too long about that, but here you can see clearly the percentages and the minimums for now and for next month and further. Let's see. Menardo, I'm not sure if I follow or understand fully your question. I'm not sure what you mean with contract. But if you join in September, yeah, then basically this will be valid as long as you stay a member, these percentages. I hope, but maybe that's not answering your question. Let me know. So how does the profit share model work? It uses a high watermark method. So that means that a new profit has to be made. So if, for instance, your account goes from 2,000 up to 2,200, then goes down back to 2,000, and then goes up to 2,200. The second time you go up to 2,200, the second time you don't pay anything because you didn't make a new, push. So only if your account really improves will you pay a profit on that. It does use the PAM from Keto Markets does use open and closed trades, by the way, but that is actually better for you that open trades are included, because there were EAs that were booking profit and closing trades with profit, but kept open trades with huge losses on the side, or not on the side, but they were open. So they kind of took profit from those closed trades and neglected those open losses in a way. So there is a bad incentive in a way. Not that this EA would capitalize on that in any way, by the way, but that is the reason why this PAM calculates both open and closed trades. That's the reason. Okay. Now, in reality, it doesn't matter because if the open trades are profit, that means the next month or in the future your account has to grow more before you share profit. If the open trades are losses, that means you pay less profit share. So in the end, it boils down to the same. Okay, so that's how this profit share model works. So yes, the September 2020 shares are valid for every month as long as you remember. I already mentioned that. Why is 1.5K the minimum for the profit share model, but 2.5K is the minimum for renting it? And that's because of the pool of traders that are trading it. And there's more capital available. So it's a percentage. PAM is a percentage allocation method. So that's why it's possible to do that. The EA will be trading about 2.5 to 3,300 euros per lot, per micro lot. So it's slightly, at the beginning we'll slightly reduce the risk, not use the top max risk, but that might change in the future. So that's why it is possible that, there's 1.5K for the profit share model because of the PAM system. You can still rent the EA, yes, it's still available. And you could also do both, rent and use the profit share if you want. But yeah, there's, of course, with rent, it's a returning cost. And with profit share, there is no upfront risk. So that choice is yours. You have that choice now at this moment. Good question, Daniel. The backtest performance was done with a very low risk, with 10,000 euros per one lot, and we'll be trading it anywhere between 2.5 and 3,300. So 3 to 4 times less capital than with that backtest. That's why the live results are so much better, because we're using less capital for one lot. We recently completed actually a backtest with 2,500 euros for one lot rather than 10,000. And soon I'm trying to upload it already to my FX book. Hopefully soon it will be available and you'll see the difference. The drawdown I'll show you. The drawdown will be higher, the potential drawdown for when you're trading with 2.5 to 3,500, of course, capital per one lot. Definitely. The return will be higher, but the drawdown will be higher too. That said, when I look, if I remember correctly, when I look at the backtest for 4.5 years, not one single month was negative. So the drawdown typically occurs within the month. So yes, drawdown could occur. Sometimes it could be hefty, 70%. But if I look at the equity curve, it's a pretty smooth run up. So from my perspective, these drawdowns, these heavy drawdowns, I don't know, as far as I can see, do not happen often in live trading. Pretty smooth run for a year plus. Yes, the maximum could be anywhere between 50 and 70 as far as we see. Correct, that is a huge drawdown. Correct. That's why with the PAM, we are not trading with the max risk. We're going to trade with a little bit less. We're starting with about 3,300 euros per lot. And in that case, the drawdown should be about 50%. Whereas if you go with the max risk, it could be up to 70%. Correct. But if you see how many times it happens, not often. So it seems to be just a one-time thing that happened once, as far as I can see. But it's not something that seems to be regularly occurring. But one of the reasons why we want to start a little bit with less risk, so that the drawdown, the max drawdown we've seen, would then be about 50% rather than 70%. We think that would be a bit more comfortable for traders. Maybe we'll change that, but that's how we're starting with. Maybe I can explain a little bit more first about the backtesting then. This was that backtesting with an initial deposit of 2,500 rather than 10,000. This is new info. And you can see that the equity curve in all cases, live trading backtesting is very, very steady. And you see sometimes a drop here, as you can see here, but it's like short temporary dips, really. So drawdown here, 50, as you can see, 53% actually with the max risk. So actually that's the max risk actually. So with slightly lower risk we're taking, the drawdown could be maybe 40%, something like that. That's what I expect, at least at the moment, plus minus, if I do the math correctly, because this 53.3% is with the max. I'm looking at this, with the max risk. So let me just quickly calculate that. Not good in math in a live webinar, but I think, yeah, about 40%. Forgive me if I made some math mistake here under pressure, but yeah, about that, I guess. When I said 70%, that is really the max we've seen over lengthy testing. In this test, in this 4.5 years, it didn't even reach that. It reached 53, as you can see, with the max risk. So when I speak about 70, it's really much more of an exception. But we should always be aware that could happen, right? But even in this test of 4.5 years, it didn't even reach up to 70. It was 53.30 actually. So if we take a little bit less risk, it should be about 40 max. But anyhow, as you can see, even though that risk of a drawdown is there, it's pretty much a nice equity, very kind of straightforward equity curve, as you can see in this 4.5 years of backtesting. And the number of trades is just quite overwhelming. It's almost 15,000. So there's a lot of data in this 4 years and 8 months, actually, almost 5 years, I guess, on the Eurodollar 5-minute chart. 340, almost 350,000 candles tested. And you can see with initial deposit of 2,500, the same total net profit is made, about just a bit more than 9,000. That net profit was the same with the 10,000 capital. As we tried to explain in an article, that it's the lot size here that is important, not the capital. So, so that's why percentage-wise, this is looking much better than with 10K, of course. That's why we did this test. So the results, let's see, I lost a little bit of my train of thought. But anyhow, 70% of the positions of the trades were won, as you can see. Yeah, so this is the most recent test. I tried to add it already. Let me see if it worked out by any chance. Here you can see the profile from Elite Currency, and you see the 2016 to 2020 test. Zeus CA is 2018-2020, and this is 2016-2020 with max risk. I don't think it was, somehow I tried to upload it, but it didn't work. I will try in the near future again, so you can keep an eye on that. But there's really little difference. The only difference is the initial deposit is different. This is with 10K and this is 2.5K. But we still wanted to add that so that traders can see that in reality as well. Yeah, we will still do one more test. There was a member who asked for a test in a different period of time, going back maybe even 10 years. And we're working on doing a year or 1 or 2 years from that time, even further back, because this is, although I think it's a massive test, 4.5 years on a 5-minute chart, I understand that, of course, traders are curious, more data, more information. So we are working on that as well, as to do a test, smaller test, but further back in time. So that's coming up. So here you can see this is with the 10K account, and earn about the same profits, as you can see. And so this basically you can multiply by 3 to 4, depending on how much risk you take. So these percentages might not look that exciting, but keep in mind that it's with 3 to 4 times less risk, so you can multiply it by 3 to 4 times. And as far as I can see, every month was positive, basically. I didn't see any negative month really in this live or backtesting. So all the drawdown happened intra-month, which is pretty cool as well. An interesting aspect of that. This is a live account, and some of you have seen this already. We had a great start with the max risk approach, 9%, 8%, and now 1.6 in the current month at least. So that's a great start. And pretty much the same equity curve as you can see here. All right. Here you can see more live trading accounts as well, dating back to June 2019, February 2020, and this one is from April 2019 with different risks, all varying between 98 and 210. Drawdown here 5.6, here 13, here 46%. This one had, of course, the most risk, most drawdown because it also has the most gain, most risk. And yeah, the monthly average anywhere, as you can see, between 4.6 and about 9%. So let me dive into some of those stats, as you can see here. Monthly, it could be anywhere between 3 and 15, but depending on your risk, on average, it will be between 5 and 7% in most cases. On a yearly basis, it will probably be about 70 to 100%. Win rate could be anywhere between 70 and 75%. Reward to risk ratio is going to be lower than 1 to 1. Could be anywhere between, this is a little bit too high, actually. I think it's more, it is probably correct. About 0.6, I think 0.65 indeed to 1. No, it's correct. Usual drawdown is lower. But when I talk about max drawdown, then it's kind of like an exceptional drawdown as far as we've seen in live trading and backtesting at least. This is more typical drawdown, but of course we got to be aware that it could happen, a bigger drawdown. And the profit factor typically about 1.5 to 2. So let me address some of your questions. It's adding up now, I see. Before we review some of the aspects of the strategy. Let's see. Daniel is saying higher risk but higher return. Yeah, that's indeed absolutely. That balance is always there. Yes, indeed. So far, the worst case in the last 4.5 years was about 53 with the max risk, 53% drawdown with the max risk. Although we emphasize that. That we have seen in a case where a drawdown was up to 70%. Okay, so with the max risk, not in the last 4.5 years in backtesting, but before we have seen that once. So yeah, just be aware of that. Of course, indeed, nothing says nothing about the future, but it's good to know about how far it could go, what the boundaries are, and what the typical drawdown is, but also indeed, what could happen if it goes beyond that. Let's see. Joe is asking if you start with 10K, correct, the drawdown, and you trade the same lot size, one micro, yes, the drawdown will be lower, maybe only 10-12% in that case, but the gain will also be, well, the profit in terms of euros will be the same, but the percentage will be lower because you might still gain that 9,000 after 4 years or so, but 9,000 out of 10,000, of course, percentage-wise is less than 9,000 out of 2,500. So money-wise, it's the same, but percentage-wise, of course, will be less. If you however, trade 4 times 2,500, then you, of course, have the ability to potentially earn 4 times 9,000. So then it would be 36,000 total rather than 9,000. So yeah, it just works like that. If the more capital you use, the lower the percentages. Whereas, I mean, Sorry, if you keep the lot size. Whereas if you use more capital but adjust the lot size, of course, then the earnings will be higher and the drawdown will be higher. Marco, yeah, it's basically very similar to this, to be honest. We're going to be trading about 3 to 3,300 at the beginning and then see how it goes. And might slowly move to max risk. I don't know. We will definitely, of course, inform everyone. But that's how we're going to start, about 3 to 3,300 per lot. So the percentages will not be that much different. It's a small difference with this. This test is much closer to what we're going to do. We're going to start with than the original test with 10,000. Yeah, 2.5 to 3,000 is 1 micro, actually. 1 micro is the base unit. Not all trades will be 1 micro, by the way, but it's the base for the strategy. And then the lot sizes can be higher, but and will be higher, but it's like the basic starting unit for the strategy. Let's see. So yeah, it is based on math, a lot of trades. It's a good strategy, very tight trade management in the sense that there a lot of small wins, a lot of trades. There's no stop loss used. Be aware of that. It's only traded on the euro-dollar and 5-minute chart. That's why there's a fixed lot size approach rather than a percentage risk approach. It's fully 100% automated. No intervention needed from the trader. It uses some technicals like RSI for U-turns. Otherwise, it's purely based on math. And there are a lot of trades. So you're going to see, yeah, typically what we've seen is a very smooth equity curve. So that's great for the nerves. Regarding how to start, by the way, here is a link with the info page. So you can always find more information about that there. And you will see the profit share conditions from October. I don't think, so be aware that in September you're going to have better profit conditions. You will also find the rental access if you prefer that. But with the profit share model, in any case, what you need to do is basically open and verify an account with the supported broker, at this moment, Key2 Markets. Then deposit the funds, at least 1,500. It says on our page 2,500, but 1,500 is actually the minimum for the PAM, for the profit share model. And be aware that the account with the broker needs to be a euro account. You can find detailed instructions, by the way, in the page just below how to join. I will share that link here as well. Which account doesn't matter. By the way, you can choose. I as far as I heard, it doesn't matter for the CA. You can ask Key2 Markets themselves if you're not sure which one you think is better. Let's see, but I think that let me check quickly if there was a preference from our team for a account. Yeah, any account is good, but I'm seeing here Best Special Pro 8. Okay. Let's see. Then after funding the account, then it's time to join the PAM. You will find a link to the Zeus CA PAM by going through an instruction file on this page, and that's the link I sent actually here in this chat. For those looking at the recording, just go to our Zeus EA page, and you'll find 3 steps how to join. With below those 3 steps, an exclamation mark with detailed instructions available here. So if you click on that, you will find those instructions. So you just have to go to the Zeus EA page, find how to join. And that is basically just below the profit share conditions, or just above it actually. There's also Zeus EA profit share and C instructions. So you can find those instructions there, in fact. So that's how you can join and get started. Let's see, Marco is asking, correct. Yes, starting with a little bit more capital per micro, just to get things started with not necessarily all the way full throttle max risk. We'll see how that goes. Might change that, but that's just to start off with. But it's very, I mean, it just gives us a little bit less risk, but it's a small difference, and it's quite close to the max. Let's see. Theo is asking that already has an account with Key2 Markets for the Ultimate EA. Can I just add the funds to also include the Zeus EA? I think so. Yes, I think that should work like that. If you already have, basically, you already fulfilled the first step, which is the account. So you just need to, in that case, do step 2 and 3, which is fund your Key2 Markets account with more capital that you can afford to risk, and then do step 3 and allocate that join the Zeus EA PAM and allocate that capital to do that. So yes, but Key2 Markets is very very friendly, very fast, and they will answer very quickly if you have any questions or if you're not sure. They're, in my experience at least, they're very on the ball and very very good in getting things done and answered. Okay, let's see. Great, Marco. Great to hear it. Yes, I'm trading as well. Several accounts, in fact. Let's see. We got, I think, 3 accounts running for, I think, a total of, how much is it? 15,000, I think. Yeah, so great stuff. 10K is awesome. In that case, you got 15% locked in there, which is a great percentage, I think, and a nice discount compared to the usual one of 30 if you were with 10K later on. So that's great. Let's take a look at a live account again. One of the live accounts. Let's see. Here we go. I think this one was with, let's see, this is with 2.5K, I think. Yep. This one was 2.5K, now at 3K, up 500. But we got another one with 2.5K for the PAM, and then we have a third account with 10K actually. All right, folks. I guess that's it. No other questions. I'm excited about Zeus. I must say I'm getting I'm more and more impressed actually as we go along each month. I mean, for me, backtesting is always something I value. So the 2-year test already, I think, was a great info. But really, the 4.5-year test really blew my mind, because it's quite a lengthy test with 350,000 candles. So yeah, that was impressive for me at least. And yeah, live trading, of course, certainly didn't hurt either the last year. And this account, again, just started, but up 20. Other accounts now already almost 1.5 years. So I like it. It's maybe not as explosive as some of other EAs, but certainly a steady one. And I like that particular aspect as well. It's good to mix it up and have variety in that regard. So yeah, I'm excited. I'm happy that that you guys were here, and thanks for joining. Thanks for your time. If you have any follow-up questions that this EA didn't answer, this webinar didn't answer, feel free to reach out through our email and let us know. If you're looking at the recording, again, feel free to do that too. And we'll be back next week, Tuesday, with our usual automated trading webinars, by the way. So you can always use that as a moment to reach out to. It's Tuesdays, every Tuesday, or mostly Tuesdays in the morning, 7:30 a.m. GMT time. Last week of the month, we have one in the evening. And that's a weekly webinar looking at our automated trading systems. At this moment, Zeus EA and Ultimate EA, but London Open Advanced EA is coming very soon. All right. Once again, thanks, and see you soon, guys and girls. Cheers.